Welcome back to the Deep Dive. Today, we are jumping straight into the deep end with Bitcoin.
A very volatile deep end at the moment.
Exactly. We've got this incredibly dense technical analysis in front of us, charts, indicators, a whole stack of metrics. Our mission is pretty simple, really.
To make sense of it all.
Yeah, to give you the comprehensive market knowledge you need, but without you having to, learn how to read every single candlestick pattern yourself. We're going to be looking at 3 different time frames: the big picture, long-term view,
Then the daily, and finally the really short-term fluctuations.
right? And we'll be translating some of these more complex indicators, things like SAR, RSI, Bollinger Bands, turning them into clear, meaningful insights.
And that's so important. That holistic approach it's essential. In a market this driven by emotion, if you only look at a short-term chart, you're setting yourself up for failure.
You risk getting whipsawed, as they say.
You really do. The analysis we're digging into is powerful because it uses that macro view, the long-term trend, to give context to the immediate high-risk stuff we see on the smaller charts. You have to connect those dots.
Absolutely. So we're going to follow that path. Start with the broadest, most, severe assessment, the structural collapse, before we zoom in to see if there's any hope on the horizon. Okay, let's unpack this long-term view first. We're talking about the 1-week chart, and the analysis here is, well, it's strikingly clear.
It's grim, let's just say it.
Yeah, it's pretty grim. It says BTC has decisively transitioned from an uptrend to and I'm quoting, a strong long-term downtrend. This isn't a dip. This is a fundamental shift.
That's right, and you can see it visually on the weekly chart. The evidence is right there in the form of three large consecutive red candles.
A classic breakdown pattern.
A textbook breakdown. It signifies what the analysis calls a strong withdrawal of capital. It means the big money is heading for the exits. The sellers are completely in control of the market's momentum.
And it's not just the shape of those candles, is it? It's where the other technical tools are positioned. You mentioned the parabolic SAR and Bollinger Bands. What are they telling us here?
They're just screaming negativity. So the Bollinger Bands, they measure volatility. When the price falls away from that middle band and starts hugging the lower band, which it is now,
What should I do?
that's a crystal clear confirmation of intense bearish pressure. There's no ambiguity there.
And the parabolic SAR.
So the SAR is basically a trend-following indicator. Think of it as a series of dots. And right now, those dots are sitting above the price.
Acting like a ceiling.
Exactly, like gravity, just constantly pushing it down. It confirms the long-term decrease is locked in. It's a sustained sell signal.
And beyond the charts, the analysis also points to these psychological barriers being shattered.
Huge ones.
First, losing the big round number, $100,000. Then, that really critical, heavily defended mark of $95,000.
When those levels go, it's not just a technical event. It confirms the sheer depth of the selling pressure. It's a psychological blow to the market.
Okay, so this is where it gets a bit counterintuitive with the RSI.
Yes, the relative strength index. So the RSI is currently very low. It's sitting somewhere between 23 and 37.
Which technically means BTC is oversold.
Correct. But, and this is a huge but, the analysis is extremely specific on this point. It says there is NNO strong reversal signal yet.
So why is that so important? I think for a lot of people, oversold means time to buy, it's about to bounce.
Right, that's the common assumption. But what it implies here is that the weakness is structural. It's not just a temporary panic sell-off. If you were seeing real buying interest, even in an oversold market, you'd expect to see something called bullish divergence.
That's when the price hits a new low, but the RSI doesn't follow it down, right?
Exactly. It signals that the selling momentum is running out of steam. The fact that we don't see that divergence suggests the market is just too weak to find a real bottom yet. Oversold doesn't guarantee a bounce.
So, given this really bleak long-term picture, what would it take to actually kill this downtrend? What's the magic number we need to reclaim?
It's a massive number, and that really highlights how deep this collapse is. The long-term downtrend would only be negated if BTC can somehow reclaim the range of $105,000 to $110,000.
Wow, okay. That's a long way from here.
A very long way. And just as important, that parabolic SAR indicator, those dots, would need to flip from above the price to below it. They'd have to turn from resistance into support. Until both of those things happen, the downtrend is the reality.
All right, now we're zooming in a bit, and this is where it gets, I think, really interesting. We're moving to the medium term, the one-day frame.
And the picture here is just as brutal, unfortunately.
So it's defined as a strong medium-term downtrend with, again, absolutely no signs of reversal on the daily chart.
Yeah, the daily chart is just a textbook picture of steady deterioration. You see the chart constantly creating what we call lower lows, or LL.
Meaning every dip is lower than the last one.
Precisely. It's the very definition of bearish control. It shows a relentless, systematic selling of the asset. And we also see the Bollinger Bands are expanding on this daily chart.
Which means more volatility.
Yes, but if the bands expand while the price is going down, it signals that volatility is being channeled strictly in one direction, down. The selling isn't slowing down, it's accelerating.
And that lack of bullish divergence you mentioned for the long-term view.
Yeah.
How critical is that here on the daily chart where the RSI is noted as being even lower 1927?
It's absolutely crucial. I mean, those RSI readings alone just scream fragile market. But the lack of that key bullish divergence confirms there's no meaningful buying, no accumulation happening at these levels.
People aren't seeing this as a bargain yet.
Not in a significant way. The analysis pointed out the price was hovering near 90,000, having just smashed through that key daily support at $93,000.
Okay, let's pivot to the price map. This is essential for you to frame the next few days. Can you lay out the support floors and the resistance walls that the analysis identified?
Absolutely. So at the time of the analysis, the immediate floor, the near support, was between 89,000 and 89,500, and it was already being tested.
Okay. And if that floor gives way?
The next safety net, the deeper support, is down in the $86,000 to $87,000 range.
And looking up, what's the opposition look like?
It's a wall. The resistance levels are stacked. First, you have to get through 95,000, which is a big psychological and technical hurdle. Then 99,000, and then after that, 102,000.
So each one of those levels is a potential battleground.
A huge battleground. That's where sellers who bought higher up are just waiting to get out at break even.
That is a serious climb just to get back to neutral. So what would it take then for this daily trend to even begin to show signs of a real reversal?
It would take decisive, powerful action. To reverse the structure of lower lows, the price has to first get over that $95,000 wall. But that's not enough. It then has to conquer the next one at 99,000.
And hold above it.
And hold above it, yes. If it can break and stay above 99,000, then the medium-term dynamic starts to shift. But until then, we are structurally bearish.
Okay, so the long and medium views are overwhelmingly negative. Extreme caution is the message. But now we zoom in one more time to the shortest time frame, the 4-hour chart. We're looking for any little sign of life.
And the good news is, there is one. There's a signal that a short-term bottom might be forming, which could lead to a technical rebound.
And you're stressing the word rebound.
I am. Rebound, not a trend reversal. This is about looking for a quick, high-risk tactical move, not calling the absolute bottom.
So what's the sign?
The analysis spotted a long lower wick on a 4-hour candle, right around $89,281.
Okay, for those of us not staring at charts all day, break that down. What does a long lower wick actually tell you?
It's a really crucial sign of an immediate defense. So a wick is that little thin line that extends below the main body of the candlestick, right?
Right.
A long lower wick means that during that 4-hour window, sellers managed to push the price way down, but then, and this is the key part, buyers stepped in aggressively and pushed the price all the way back up before the candle closed.
So it's like a footprint, tangible proof that buyers are waking up at that specific price point.
Exactly. It's buying power activating.
Yeah.
And there's more. The 4-hour RSI, while it's still low, is showing that the intense selling pressure is starting to ease off a bit.
It's getting exhausted.
It's getting a little tired. And we see the parabolic SAR. Those dots are still above the price, but their distance from the price is starting to narrow.
Oh, interesting.
It's a hint that a SAR flip, which would be our short-term reversal signal, could happen soon.
So if this rebound does trigger, if the buyers hold that line, what are the immediate upside targets before it hits another wall of sellers?
The targets are sequential, and they're pretty close. First up is 91,500, then 92,500, and then the most critical target is 94,000.
And these are all short-term goals.
Very short term. They all respect the fact that the bigger trends are still pointing down.
But let's be very clear here. This bounce is not a done deal. What's the critical condition? What's the make or break level for this rebound?
It is highly, highly conditional. It all hinges on one specific zone. If Bitcoin fails to get over and stay above the resistance area between 92,700 and 93,200,
Then the party's over.
the party is over before it even starts. If it fails to break that ceiling, The buying pressure has dried up, and the price will almost certainly turn right back around and retest that $89,000 support level again, and probably break it this time.
Okay, so this is where we put it all together. Long-term collapse, medium-term downtrend, and this very fragile short-term hope.
Oh.
The analysis breaks this down into 3 concrete scenarios with probabilities.
Which is really helpful for managing expectations. So let's run through the numbers.
Let's do it.
The scenario for a continued decrease is given the highest probability at 40%. The scenario for an increase, so that rebound we just talked about, is at 35%. And then a sideway, choppy market is at 25%.
Okay, so I have to ask, if the long-term trend is collapsing and the daily chart is just grinding down relentlessly, why does the increase scenario get a 35% probability? That seems pretty high, almost as high as the decrease.
That's a fantastic question, and it really gets to the heart of technical analysis. That 35% isn't ignoring the downtrend. It's reflecting the strength of those immediate short-term signals we just discussed.
The long lower wick and the RSI.
Exactly. It suggests that while the overall trend is down, the market is so oversold in the short term that it's primed for maybe a short squeeze or just a technical bounce to clear out some liquidity. It acknowledges the risk, but it also acknowledges the immediate buying interest that showed up.
But at the end of the day, the highest probability is still the 40% decrease scenario.
That's the key takeaway. And the critical trigger for that scenario is the loss of that $89,000 support level. If that floor breaks, the analysis lays out a quick cascade down to 86,800 and then 84,500.
And it does mention an ultimate line in the sand.
It does. It explicitly calls $80,000 an extremely strong support.
So that's the final backstop.
That's the structural defense from a much, much earlier market phase. But the overall message from the analysis is caution. Lean towards anticipating more downside, even with that $80,000 safety net way down below.
I think what's great about this analysis is it gives you more than just numbers. It gives you a framework for how to behave in a weak market like this.
Yes, it moves into risk management. And the core message is one that everyone needs to hear. Absolutely avoid FOMO.
Fear of missing out.
It's the most dangerous emotion in a market like this. When you see a market constantly setting lower lows, the gut instinct is often to buy the dip, right? You chase the price down.
Trying to catch a falling knife.
That's the one. The analysis says don't do that. Observation is your best tool right now. You need to wait for the market to prove to you that the sellers are actually done, not just guess where the bottom is.
Okay, so if you're watching that 4-hour chart and you're being disciplined, you're resisting FOMO, what specific technical confirmations do you need to wait for before even thinking about a short-term entry?
The analysis is very clear. You need a combination of 3 distinct signals. One is not enough in this environment.
Okay, what's number 1?
First, you need to see a clear SAR reversal on that 4-hour chart. Those dots have to physically flip from being above the price to being below the price. That's your first green light.
Then number 2.
Second, you need to see that RSI divergence we talked about. You need the price to make a new low, but the RSI indicator must fail to make a new low. It needs to print a higher low. That confirms the bears are losing their strength.
So you have a trend signal and a momentum signal. What's third?
The third is confirmation. The price has to successfully get above and hold above the middle Bollinger Band. That middle band is like a dynamic trend line. Breaking it proves that the buyers have enough power to actually challenge the downtrend.
All 3.
You wait for all 3. Only then should you even consider a high-risk entry.
That was a fantastic synthesis. So the key takeaway for you listening is pretty clear. The big picture, the long and medium term, signals a severe confirmed downtrend. No question.
But the immediate short term does present a potential technical bounce. A very high-risk one, but it's there.
And it is entirely conditional on getting over that resistance wall between, was it 92.7 and 93.200?
That's the zone. That's the hurdle. And the single most critical number to have on your screen is $89,000. The failure of that level is the trigger. It's what initiates that 40% probability, highest risk downside scenario.
So we'll leave you with this to think about. Given that the highest probability is for a further decrease, how significant is the analysis's designation of $80,000 as extremely strong support? And, maybe more importantly, what would the failure of that ultimate floor, that $80,000 level, imply not just for Bitcoin, but for the entire structure of the crypto market? That's the question to mull over. Thanks for diving deep with us today. We'll catch you next time.